Hello everyone, this is Abhijit Chatterjee recording our weekly session for Chartsarefun. This is for the week of January 27th. Today we'll focus on the Magnificent Seven stocks. We know AI has been in the news. DeepSeek's model came out on Monday last week. A big sell-off in the AI market. NVDA got hit really bad. So we'll look at, and then this weekend we got OpenAI, the call it the leading company in the generative AI space that revolutionized the whole space of Gen AI with the GPT model, came up with their latest release model called the O3 Mini, hands down beating DeepSeek. So we'll see what impact it has on the AI market going into next week. We know that tariffs was big news on Friday. It shook up the market. We see a continuous move through the weekend. The only instrument that trades 24/7 is Bitcoin. So we look at the Bitcoin as a proxy to see how it responded to the tariff news. President Trump confirmed and did announce the tariffs of 25% to Canada and Mexico on Saturday, and the 10% to China. And there was immediate retaliatory tariffs announced back by the premiers at Canada and Mexico. And China has been quiet so far, so we'll see what happens with them next week. But we know we'll look at the chart of Bitcoin, and then we'll look at a key indicator of market complacency, the put call ratio, in particular the equity put call ratio, had a big drop last week. We'll look at what that's telling us in terms of anticipating a correction, perhaps, with the market having come up quite a bit over the last, since that 2022 October low. It's been a pretty steady and a big climb in the market. So we'll see if there is an anticipated correction coming up, looking at the put call ratio. With that, the first thing we highlight to you is our blog site, the chartsarefun.substack.com. It's free. You could just have your email and you'll be notified as soon as the blogs usually come out in the morning. So when we do publish our blogs, you'll get a copy of it right away. Our YouTube site, where we publish this video every week, is Chartsarefun. At Chartsarefun is the channel. Appreciate you liking our videos and subscribing to this channel. It's free, of course. So today, as I said, we're going to look at the Magnificent Seven ETF. Roundhill has this equated ETF where all the seven stocks have an equal weight. This is an inverse, a bullish inverse head and shoulder pattern. The left shoulder happened towards late December, back to the neckline. The neckline is that horizontal resistance line near 57. Head is near 53.16, back to the neckline, and then the right shoulder happened towards mid-January near 53.8. Last week's four of the Max 7 stocks announced earnings wasn't strong enough for us to get the breakout, but we know we have two coming up this week with Google and Amazon. As I said, this is equity-weighted, so it doesn't matter if the largest stock, Apple, how it performed. Usually they do have big impacts when you look at these Max 7 stocks on the S&P 500, which is market weighted, or QQQ, but with this ETF being equity-weighted, doesn't matter what the largest stock does. But that said, any momentum breakout above 57 measures to a target at 60.78 near 61. So from where we closed at 55.65, you're talking about $5.13 more, a little less than 9% or so, 9% of upside moves still left in Magnificent Seven if this pans out. Now, let's go by the Magnificent Seven in their market cap. The largest market cap stock is Apple. Apple, over the summer months, had formed a beautiful ascending triangle. What defines an ascending triangle is the horizontal resistance line at 237, the higher lows, as we can see here, from 195 all the way up to 219, steadily climbing, and then the breakout happened in December. That upside target from 195 to 237 is near 279. Turned out it didn't quite get to 279. It reached 260 in late December. The fears of China's sales, iPhone sales slow down. There was almost news of 18% year-over-year slowdown in iPhone sales. Apple did confirm slowdown in China sales at 11%, not 18. And if any, Apple did very well on Friday after earnings on Thursday, but then kind of end of the day lost its gains because of the tariff fears. But overall, Apple broke out from that declining channel that happened from late December till mid-January. Right now, it did have a bearish engulfing candle in the sense that opened at the highs above the range of the last 2 days, but then closed engulfing the range of the last 2 days and closed towards the lows and closed red, closed negative dollar 59 cents. So almost minus 0.67% down for the day. We'll see if this week, with two strong earnings, with OpenAI's news over the weekend of their O3 mini model beating our DeepSeek's R1 model, we'll see what Apple does. Apple is actually a beneficiary of the DeepSeek model because they have them covered in their App Store and was the most downloaded. So we'll see what Apple does. But right now, the ascending triangle pattern, if we do get a MAGS breakout from the 55 to 60.7, almost a 9 to 10% upside move, perhaps Apple could continue its climb and maybe hit its 279. That's still a possibility. Microsoft has an ascending channel. It hit its peak of the channel, the top trend line of the channel near 456. This ascending channel has been in place since the lows of August. It's been climbing higher highs, higher lows, but the key was on the earnings. In particular, Microsoft got sold off, though they beat their EPS and revenue target, sold off because of their Azure growth slowing down from 34% quarter over quarter, year over year growth. It slowed down to 31. And that indicated markets' concerns that they've been spending a lot. They've recently talked about 80 billion of AI spend. But market thinks that even with all the AI spending, the monetization isn't quite happening. Azure growth didn't quite pan out. But Microsoft has claimed that the Azure growth will pick back up when they get capacity issues resolved. That's why they're spending the 80 billion to increase capacity growth of data centers so they can bring more GPUs, more AI into for their customers, for their enterprise clients. But Microsoft also got hit with, they have a big investment in OpenAI with the DeepSeek news because DeepSeek now is a huge competitor of OpenAI. And as a result, from earnings and the kind of AI related worries, Microsoft sold off. So that was a big gap down. That said, it held its rising trend line of the lows from the August. So it's held it there at 413. If it can maintain that and starts climbing again, close out this gap from near 440 and maybe resume to the top end of the trend line, that's been rising. It could head towards the 465, 470 region in the next couple of weeks or next few weeks when if MAGS does achieve its upside target towards 61. NVIDIA had a very bearish double top breakdown. The double top because it tested 153 twice, once in mid-November and then early January. It broke down from that horizontal support line near 126. That measured target from 152 to 126 is below 101, near the 100.8 level, not too far from the September low of 100.93. That's the measured target if this double top does pan out. That said, there's a beautiful ascending trend line of the lows from February of NVIDIA. We can see from February all the way climbing higher lows, and it tested that beautifully at 116. If that trend line test succeeds and NVIDIA doesn't break down further, then this could be a bullish pattern for it to continue, go close its gap near 140, and maybe resume a higher high if the bullish momentum on AI picks up. We know that NVIDIA earnings doesn't come out till later in February. Seasonally, February tends to be a strong month for NVIDIA because they always announce earnings because their quarter doesn't go from like October to end of December. Their quarter goes from November to end of January. So that's why they announce earnings late in February. So if the bullish momentum resumes, then NVIDIA could have perhaps been saved at a higher low here, may not go to its double top breakdown target near 101. It may actually resume a climb, close out the gap, and climb higher. Look at that in the next few weeks. Google's earnings, a beautiful ascending triangle. We can see that the resistance line at 203, higher lows here. That measured target is towards 221. It closed near 206, 205.6. So that has got some more upside of another $16 or so towards the 221 is what Google could climb. So we'll see what earnings does to Google on Tuesday. And then Amazon has a beautiful ascending triangle pattern breakout as well. 233 to 216, that's $17. At 17 to 233, that's a 250. It's already there, not too far. 237 is where it closed, talking about $13 of upside on Amazon. Another ascending triangle from the summer time frame also measures to 250. You can see a 201, you can see a 151. That's $50. Add that to the 201 level, that's 251. So it's about 250, 251 is where we think Amazon's target is, with two ascending triangles, one on the summer time frame and one in the more recent time horizon, both projecting to 250. That could act as a magnet, and we could expect a bullish outcome to Amazon's earnings next Thursday on February 6th. Meta has also been climbing along its ascending channel. It had very bullish reaction to its earnings, touched cross 700, crossed the top of that trend line of the channel, didn't close above it, exceeded at 710, then kind of closed below it. We'll see if Meta, I don't expect it to have a very big upside in the month of February. It could perhaps be hovering around in a horizontal fashion in that 680 to 700 region, unless some bearish news hits and then it can resume its decline back to the low end of the channel, which is unlikely until the entire market kind of corrects. So we could expect, if the market holds steady and MAGES does have its climb, maybe a little more upside, a little above 700, but not more upside, given that it's kind of at that steady ascending channel and it's already at the top of its trend line there. Tesla has a very different chart than any of the others. This is a parabolic channel, not like the other channels that you have parallel lines on the top and the bottom. A parabola on the highs, a parabola on the bottoms, a beautiful parabolic line, hit the top end of that parabolic channel at 488, a declining channel since then, broke it down towards the 377 level, reacted well after earnings. Earnings was on Wednesday, Thursday, Friday, both days. It kind of is now wanting to go higher. A break above 439 takes it closer to the 500 level. So looking bullish. Tesla was the only one, by the way, last week among the Magnificent Seven that missed EPS and revenue. However, Musk in his classic way was very bullish on the company. He said that their Robotaxi would launch in Austin in June. He talked about their humanoid robots making huge revenue potential of 10 trillion. That was a very bold prediction that he made, that there would be humanoid robots everywhere that he would be able to sell to. He's going to capitalize on his factories already. 2025 is going to be a big rollout of the robots across his factories. He's going to be using more AI, bringing the cost of the car down, increase profit margins, and it seems to be very bullish. He calls 2025, he and his CEO, CFO, Vaibhav, he's the founder and CEO, of course, Elon Musk, his CFO, Vaibhav, both on the earnings call were very bullish, saying that this was the turning point year for them. So we'll see if that's what it is, then this could be a beautiful W-shaped double bottom from the 488 to 377, 439 to a slightly higher low at 384, resumes its climb, breaks above 439, expected to cross towards 500, even exceed it. If this parabolic pattern continues, you're talking about maybe $1,000 potential for Tesla sometime in 25, 26, who knows. Looks, again, a very nice parabolic pattern so far in the stock. I said I'm going to end with some thoughts about the tariff and how the market is reacting. In particular, Bitcoin trades 24/7. So this is the 31st. Friday evening, the news came out, confirmed that yes, the tariffs would get hit. So from a 106, very sharply came back to 101. This is in the hourly chart of the Bitcoin, and every candle here is an hour. This is a head and shoulder. So a 101.5 is the neckline. The left shoulder is from 101 to 103, back to the 101.5. Head was 106.5 on Thursday, back to the 101.5 to 102.8, similar to the left shoulder 103, right shoulder 102.8, broke down into the February 1st on the tariffs. Initially, it didn't quite break down in the initial announcement of the tariffs in the morning. And then when the evening, we heard back from both Mexico and Canada that they would be retaliating with their tariffs, it since then broke down. And now this breakdown measures to a low near 101 to 106.5 is 5,000. Subtract 5,000 to 101.5, it's 96,500. We are near there. We are 98,100. Talking about another 1,500 or so drop to get to the 96,500. Quite possible, in the later part of this afternoon into today. We're recording this on a Sunday afternoon. This is possible when by end of the day today, Sunday or something, Monday morning, we are already there. So that's the target on Bitcoin, which means their bigger pattern on the daily chart is a cup. So from 108.4 to 89.1 was when we got around the week of the 13th, up to 109.3. So that's a cup. The handle turned out to be a bit more shallow than expected, deeper than expected. That's the way, usually for a cup and handle, you get a shallower handle. But if it comes down all the way to 96.5, then still could potentially be a cup and handle if any other bullish news comes next week and we get the breakout. It's right now below the 50-day moving average, which is at 99,200. It's at 98,100. I think very good chance, knowing from the hourly chart, of the 96,500 is where Bitcoin is headed. We could probably see that in the next few hours tomorrow, but that might be a buying opportunity if we do get MAGS as a bullish breakout. Because we know over the weekend we got the OpenAI's bullish news with their model doing better than China's DeepSeek. That said, there is a concern for the bulls. This is the put call ratio, which in the equity side involves all the individual stocks that are in the Chicago Board of Exchange, CBOE, and as well as the ETFs, the index ETFs, Spider, SPY, Diamond, DIA, the small cap IWM. They're all counted in the equity put call ratio. That was a sharp drop from 0.56 to 0.51. This is the 10-day moving average. This means that it ended near 0.49, which means it was below zero point 0.5, which means there were more calls, double the calls of puts that were traded, transacted, and as a result, the ratio has come down. This overall looks very concerning. Why? Because if I look at a little longer term chart of CPCE, it kind of cycles back and forth. When it crosses zero point 0.8, that's extreme bearishness, and market starts reversing higher. When it goes to the 0.52 or lower levels in the zero point 0.5 region, that's usually signs of market top. So now this is a longer term moving average. This was just a 10-day moving average. We see over the last 7 months, we're already at the low end of it, at a lower low than what we have seen in the last 7 months, which means a bit of a concern of complacency sticking into the market. And from a longer term 30-day moving average of this, we can see it anywhere cycles from 0.54 is where we do a horizontal line, and then on the 0.8. Once it crosses that, it's danger zone for the market in this particular case to start. Well, zero point 0.8 and higher is actually a market bottom, and market starts rallying. 0.54 and lower is danger zone of a market reversal from a top to decline. So here we are hovering around 0.55 on the 30-day moving average of the CPCE. We did cross a whole region, but that was an exception on the COVID recovery, tremendous liquidity in the market, and that was when we saw CPC go all the way to 0.4. That's rare. Most of the times, as we can see, it very like swiftly goes below 0.54 to towards 0.5 at the most, and immediately reverses higher very sharply. So we could maybe, if the MAGS stands out and we do get the MAGS bullish breakout, Google and Microsoft, Amazon earnings next week, and then if NVIDIA is strong later in the month in February, maybe we could get some upside in the market, which would be a contrarian part, and that could mean that CPC would even decline further. But that said, we are heading towards a region where a correction is inevitable, whether in the month of right now coming up in the next couple of weeks because of all the tariff concerns, or it gets stretched out to maybe in the March timeframe when this falls further. Magus meets its target near 61, and each of the respective stocks meet their targets. Apple near 279, Microsoft maybe resumes its climb to the top end of its trend line over 465.70. NVIDIA, results on the bullish side. NVIDIA's potential is if it breaks 153 from 116 to 153, that's close to 35 points. At 35 to 153, that's 188. So NVIDIA could head back there. Google has upside, not so much, but from 206 level towards the 221. Amazon's upside is on like 237 to the 250, another 13 point. Meta is already at its upside, would probably hang out here on the 700. Tesla by far could be the most bullish looking stock, which could go and hit 500 in the next couple of months. With that, good luck trading. We'll talk to you next week. Thank you.